Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filing so you don't have to. Today we're cracking open an 8K report from TransCode's Therapeutics, a company with a name that sounds like it's straight out of a sci-fi movie. Let's see if their financials are as interesting as their name, or if this is just another case of corporate smoke and mirrors. This report is called an 8K, and companies file these when big, important events happen that investors should know about right away. This one is dated March 23, 2025, so let's get to it. The big news here is that TransCode's Therapeutics has entered into an agreement with a company called ThinkEquity LLC. ThinkEquity is acting as what's called a placement agent, basically like a middleman, to help TransCode sell shares of its stock directly to investors. TransCode is offering a whole bunch of shares, 10 to 50 exact of their common stock. They're also throwing in what are called common WO, a NAVUN2 share in the future. It's like a buy one get one free deal, but for stocks. The price is $0 buy and get one free deal, but for stocks the price is $0.98 per share of stock, with a warrant to buy another one. ThinkEquity isn't doing this for free, of course. They're getting warrants too, called placement agent warrants, to buy 512,500 shares. This is how the middleman gets paid. TransCode is hoping to get around $10 million from this offering before they pay any fees or expenses. The deal is expected to close around March 25, 2025. So that's a lot of new shares of stock out there, and a way for the company to get some much needed capital. These shares and warrants are being sold under a registration statement that TransCode had already filed with the Securities and Exchange Commission, or SEC, back in 2022. This just means that the company had told the SEC that it might sell shares in the future, and now it's following through. Now, let's talk about the warrants. The common warrants, those given to investors, can be used starting March 25, 2025 and expire in 2030. The price to buy a share using one of these warrants is $7 per share. The company includes some standard language saying that the details in the agreement are really just for the benefit of the parties involved and not necessarily a guarantee of anything to investors. Basically, don't take these promises as gospel. Of course, this report isn't an offer to sell anything. It's just a notification of what's happening. You can't go out and buy shares just because you read this report. If you really want to dig into the details, you can find the full text of the agreements about the warrants attached as exhibits to this report. TransCode also put out a press release announcing the pricing of this offering. Companies often do this to get the word out to the public. You can find that press release as an exhibit to this report too. It's all public information. Finally, there's a list of all the exhibits attached to this report, like the warrant agreements and the press release. This just makes it easier to find everything. Now, what does all this mean? Well, TransCode's Therapeutics is raising money by selling a lot of stock and warrants. This dilutes or reduces the value of the existing shares because there are more shares available. Because there are now more pieces of the same pie, they need the cash, but it comes at a cost to current investors. From the looks of it, they will be receiving $10 million through the offering. Dilution of stocks is bad for shareholders, but it may be necessary to continue operations. With the extra cash secured, let's see what direction TransCode is heading in. While raising capital is generally a good sign, there are also potential downsides. The company is dependent on this cash injection. If the new strategy does not pan out as expected, the company could run into trouble and will have to seek alternative capital to keep afloat. Ultimately, whether this is a good or bad move depends on what TransCode does with the money and whether they can turn their science into successful products. It's a risky bet, but that's often the case with smaller biotech companies. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. See you next time.